Community, welcome back to another episode of the Dig Deep, the Mining Podcast. And we have another returning guest who first appeared in episode 106, which was back in December 2020. Mark Brennan is the CEO and co-chairman of Cerrado Gold, a privately owned Toronto-based growing precious metals mining and exploration company, building a portfolio of assets in South America, including Argentina and Brazil. Mark is going to give us an update on the company around their Minera Don Nicholas operating mine and some of the other projects that they're working on. So let's welcome Mark back to the podcast. How you doing, Mark?
I'm doing great, thank you, Rob. How are you doing?
I'm doing good. It's a Friday here, late on a Friday, and the weather has sort of turned, so it's pretty cold here now. So I think we're definitely, well, I'd say we are in winter, but it's getting really cold here. So yeah, the jumpers and coats, hats and scarves are coming out.
There you go. Well, we had our first, we have our first snowfall falling this afternoon, so we're fully moving into the winter phase, unfortunately. But it'll be productive. It'll be productive because we'll be stuck at home, stuck in the office, getting things done.
Yeah, certainly. Right. Just wondered if you can obviously give us a brief introduction of yourself and the company. Obviously, if you want a little bit more in-depth background on Mark, then you can go back to episode 106, which we recorded in December, or sorry, it was released in December 2020. So just wondering if you can give us a snapshot of yourself and the company.
Sure. Basically, my background is I've been involved with a large number of companies where we've either started companies off or we restructured companies, and I've been working with a crew of people for the last better part of 20 years. We started working in 2002 with a company called Desert Sun in Brazil. We had a Jacobina project that we sold to Yamana in 2006 for $700 million. And pretty much the team, as you know, the basis of the team now, we left and we started a company called Largo Resources, and we built Largo into the world's highest grade, richest vanadium deposit in the world. Currently has a market cap of I think just under $1 billion or so. But it is and generates a lot of cash, very successful asset. Subsequent to that, I left to go and run a company called Sierra Metals. We had a project in Peru, a large project called Yaracocha, and we had two projects in Mexico. And I went in there in 2015, restructured it, had a market cap of about 200 million, and I left 2 years later with the market cap approaching about 600 million. And from there, what I did is I went to work with the same group on building up Cerrado. Cerrado was a gold project introduced to me by two geologists in Brazil who I've known for 35 years, hadn't worked with before, but they are the discoverers of the Volta Grande project, which is the largest undeveloped asset in Brazil, gold asset in Brazil, with about 7.4 million ounces. And when they brought this asset, it's now held by Belo Sun. They brought this asset to us saying that they felt that this district had about 5 million ounces. So on the back of that, we went and did our due diligence, and Kurt Mencken, who is basically our president of our Brazilian operations, he has a long history with Anglo and knows gold very, very well. And so we went and did our due diligence, bought into their hypothesis, and we created Cerrado Gold. And we really on the foundation of Monte de Carmo, which is right now an asset we've since 2018. We've taken it to about 1.3 million ounces, 1.85 grams, open pittable in Brazil. It's one of the higher grade open pittable deposits in Latin America, South America. And on top of that, we've actually done some studies. We did an economic assessment, which we published in September, which would show this project to be the lowest cost producing gold company in the world. What we're looking at is in the first 5 years of production, 150,000 ounces a year at an all-in sustainable cost of $431. The nice thing here is that we only have 125 million of capex, which includes 25 million of contingency. But what we're looking at is a payback of about just over 1 year. So really, really strong economics. An NPV at 5% after tax runs around $650 million. So a really, really attractive project, even though, it's still in its discovery phase. So what we're doing is we're driving a discovery phase as well as an exploration phase. And similarly to Minera Don Nicholas, you mentioned in Argentina, we bought Minera Don Nicholas in March of 2020 as a producing mine. It was producing around 25,000 ounces. In our view, wasn't being run properly. Now we suffered substantially from COVID, but this year we'll produce just shy of 45,000, between 40 and 45,000 ounces. As we move forward, our target and the thesis for buying Minera Don Nicholas was that what we do is we end up on a base case 50,000 ounces a year with an all-in cost of about $1,000, which means at $1,800 gold, we're generating 30 to 35 million of free cash. So we are actually looking at expanding in Argentina by bringing in a heap leach operation, which should add another 20,000 ounces per year or so. Again, expanding that cash flow, hopefully to 40 to 50 million. So basically, since we last saw you, we've gone public. We went public in February February 25th, and so we've been public on the market for about 6 or 7 months now, and we've traded probably about 20 million shares, which is a lot based on our float of about 75 million shares. So that's been very good. We've had a lot of interest, with a number of analysts following us, and we think we're still at the very, very early stages of this story. But next year our target will be generating somewhere close to 30 to 35 million of cash, driving on the heap leach operation in Argentina, and then we're looking to bring our Brazilian project into construction probably sometime in late 2023 after we complete the feasibility study at the end of next year. So a lot on our plates, a lot going on, and we've seen a pretty good appreciation in our share price. So all is going well.
That's good to hear. You recently released your Q3 results, and it appears that you've got some operating cash from Mineiro Don Nicolas. What will that go towards?
Well, again, we're going to grow. We're going to grow Argentina. We think we have a huge property there, about 432,000 hectares, in what is a very, very prolific belt where we have Newmont, Anglo, Yamana, Pan American Silver, Hochschild, all in this belt, and we've got a lot of exploration to do, a lot of growth to do, and so what we'll do is initially we'll funnel all the cash for Argentina, probably until the end of the fourth quarter of next year, will be funneled into Argentina. That'll lead to the end of the heap leach operations, to where we're starting producing the heap leaching operations, which should put us at that 40 to 50 million of free cash a year. After that, I don't know, but it's a big property with lots of potential and big growth. So we think that we'll put the money in the ground now, and see how that goes.
Yeah. Are you confident with Mineiro Don Nicolas? Will it reach the production levels of sort of 45 to 55,000 ounces annually, and 900 to 1,100 as originally estimated?
Indeed. I mean, I think in terms of, what's interesting is I think our team have done a phenomenal job in Argentina. I mean, Argentina in COVID was probably one of the most severely hit areas in terms of restrictions and government regulations as to how one can operate. For a long time, you couldn't even travel to Argentina. It was, and it remains a little bit tricky to be working as well. We are actually the only mine on that belt among some very big partners or players there that actually didn't shut down during COVID at all. And so, what happened is that basically initially we would have hoped that we would have had a restructuring done probably within 6 to 8 months, but due to COVID, that was extended to the third quarter. So we went on for 18 months. But we probably lost 25 million of revenue due to that, and basically whether it be from maintenance and not being able to bring parts in or not, we actually ultimately expanded our fleet, and we brought in 20% more staff because people weren't able to travel to our fly in fly out camp. So I'm very, very comfortable that moving forward we'll have a base case production scenario of about 50,000 ounces, and I think we'll be about $1,000 all in, if not better.
You mentioned obviously with COVID, and you obviously had huge delays. Has that had a knock-on effect moving forward?
Well, I mean, what it did do, and you know why we wanted to make so clearly in our press release today with regard to the Q3 was really the fact that you know we are now finished the restructuring, and so you know all the things that we had to catch up with have been completed now as of the end of September. You know, for example, we couldn't clear because we didn't have the equipment for waste mining, etc. We were delayed, and we probably had about 800,000 tons of waste material that we needed to clear that we were unable to, and so we've now managed to catch that up. So from that perspective, you know, right now we probably during the peak of COVID, we probably had about $200 per ounce of direct COVID related costs. I would say they're probably a little less than 100 now, maybe $75 or so. So there's still some improvement that we'll see in terms of that. But at the same point, I think, you know, what the objective of the press release we issued was, we're done. We're now into normalized operations, and there's no excuses. You know, we will be producing at that 50,000 ounce per year run rate, and I'm pretty comfortable with that. And so I don't think we're going to have any future elements unless we see a revision of or reemergence of COVID, which I hope to heck we don't see. You know.
Yeah, and obviously talking about Argentina, and obviously you mentioned that you were the only sort of operating mine. What effect has that had on the industry within Argentina? With obviously a lot of delays, obviously a lot of people out of work, and then maybe getting back to work. What effect has that actually had on the industry in the mining industry in Argentina?
Well, I mean, I think in terms of it's been a severe debilitation, and you know, you look at companies like Yamana, where in 2019 they produced basically about 250,000 ounces equivalent of gold, where in 2020 they probably produced 100,000 ounces, maybe less than that. Same with Newmont and people right across the board. So I think it's been a really challenging period. As I mentioned, a small company like ours losing $25 million of revenue over that period, it has a tremendous impact. Now we haven't lost it all time, but it's being deferred. But very costly for us. So I mean, it's had a very significant impact on all these companies. I mean, fortunately, a lot of these companies are cash rich, and they can, Barrick's of the world or Newmont's or Anglo or these other guys can withstand a period of downtime. The junior companies obviously have more issue, but and with regard to Argentina itself, I mean, they really want to focus on the mining sector to bring in US dollars. And so there's been a lot of incentives they've been trying to bring into the sector and to really grow that US dollar importation. And frankly, it's hurt them more probably than it's hurt us.
Yeah. What are your exploration targets and focus for Mineiro Don Nicholas?
Well, with regard to Mineiro Don Nicolas, we're sitting currently, based on our 43-101 of about 1 million ounces. When we bought this project, we kind of saw an 8 to 9 year mine life, and basically the on a base case basis of that 50,000 ounces. So what we're trying to do is we're just trying to bring the resources into measurable characteristics, and so largely what we're doing is we're coming into a new mine for us. Starting really exploration was very difficult up until probably the third quarter due to all the COVID issues, et cetera. And so from that perspective, we're now looking to expand that resource very significantly, and I think we have lots of opportunity to do so. We'll also look at going underground. All the mines on the belt start off for the most part as open pit, and then they went underground. And now we're looking at moving underground, which even now, if we do exploration, probably means another 3 years from now, we'll be looking to go underground. We're also looking at some satellite areas where we see some very interesting, geology. So in terms of listen, I think very comfortably we should be able to double this resource, and that's something that we're really focusing on trying to do.
Obviously, moving on to Monte Carmo, can you give us a brief update on what is happening now? I know you covered it initially, but just wondering if you can give us any more.
Sure. Yeah. Well, with Monte Carmo, that's moving along very, very well. And from the last time we were on the call with you, we published actually we completed a resource actually of we took our resource from about 800,000 ounces up to 1.3 million ounces. We brought about half of those, about 500,000 ounces, into the measured indicated category, which was very positive. And then we completed a preliminary economic assessment. And I don't think I've ever seen an preliminary economic assessment of that strength and robustness in my career. We had a 96% IRR. We had a 650 million NPV, 5 after tax. So it's a very, very robust and rich project. We're located in Brazil, in Tocantins province, which is a very significant agricultural state. So they're used to the agricultural kind of industrialization process. So we're not going to come in and interfere with the community. It's a flat land with a few hills. We're not in the jungle or anything like that. And in actual fact, the infrastructure is amazing. With respect to we've got roads 2 kilometers from our mine site. We got 5 kilometers. We have the major highways. We have a town of 7,000 people 3 kilometers away who are very, very supportive of the project. So everything here is ready to move. The mineralization is coarse free gold, non-refractory, very easy to manipulate. So all in all, what we're looking at is this culminated in the PA. We will now move that we're doing infill drilling, moving that to feasibility, which should be completed by the end of next year or the first quarter of 23. And then we're going to go look to move this into construction. We want to build, we want to generate at $1,600 gold. We want to generate, $150, $200 million a year.
And as a conclusion, what's the outlook for the next sort of 12 to 18 months with obviously both those operations and projects? And also, are you looking at any other joint ventures, or are you looking at any other assets at all?
Well, right now we're extremely busy. This is a lot of work that we're doing, and so from that perspective, we kind of have our hands full. We're always looking at other assets, but the reality is that I think with the assets we have right now, with the market valuation we're at right now, it's very difficult to see any other way that we can actually maximize shareholder value aside from bringing these mines into production. So we're not going to grow for the sake of growing. Again, our lead project, which is in Brazil, you got a $431 all-in cost. That is the lowest cost producer. That will be the lowest cost producer in the world. So we'll try to grow those assets, and we think we have a lot of growth. We still think both the assets are in discovery phase. So that'll be our primary focus, unless we find something which we think is tremendous value.
Yeah, Mark, really appreciate your time and obviously give us an update. You certainly got your hands full. Certainly, obviously made quite a lot of headway since we last spoke. So again, I wish you continued success in the future, and hopefully come on next year to give us a further update.
I would love that. Thank you very much, and good luck to you, and good luck to all your investors.
Yeah, appreciate that. If our audience wants to reach out to you, how can they go about doing that? And are you across any social media platforms?
Basically, we're on most social media platforms. You can look at either our website or on our press releases. There are contact details or different modalities which you can contact us on. Don't hesitate. We're very responsive, and we love the engagement.
Yeah, thanks for your time, Mark. Hope the audience, hope you enjoyed this episode. Check these guys out. Certainly making a lot of headway, as I mentioned, and obviously as Mark's explained. So yeah, appreciate if you can share this episode amongst friends, family, colleagues all around the world. Make sure they're aware of this podcast, and make sure certainly aware of this particular episode as well. Whether in South America, North America, or anywhere else in the world. So appreciate your continued support. Keep sharing this podcast, and if you're watching on the YouTube channel, appreciate if you can like just below. So obviously the algorithms can pick up and push this podcast out further wide to all four corners of the world. So until next time, happy mining.